Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 22nd of March, comes to you from London. And we start by looking at the dollar. Fed announced another rise in interest rates last night, and the dollar fell. So it's not what you'd normally expect with a rising of interest rates, but the dollar just showing up that weakness there. So we're back to bearish on short, medium, and long-term charts, and we're seeing that in the point and figure charts as well. We haven't yet activated this downside target, but we don't have a lot to do in order to do that. So it's still all about dollar weakness, and of course that means euro dollar is strong based on that dollar weakness, and we're seeing that rise there. Japanese yen is the dollar showing its weakness here this morning, again testing the new lows. Really like an ascending triangle just building here on the Japanese yen dollar chart, and we've got quite a few downside targets, 0.5%, 1%, 2% downside potential. So looks like the dollar will go lower. Looking at sterling, sterling rising against the dollar here, nudging that 142 mark again this morning. So looking stronger there. And against the euro, we're seeing sterling just rising a little bit as well. So that's continuing that short-term trend. We've got a target here to 120. Taking a look at sterling Swiss, we see that rise continuing, and against the Australian dollar 183, sterling is just appreciating here as well. Taking a look at Bitcoin, Bitcoin's up 1% this morning, still bullish in the short-term chart, still got quite a bit of work to do here on the long-term chart. So we can see here just prices are struggling below the cloud. Got a lot of work to do to get back to those levels. Taking a look at the US stock market, still struggling a little bit on all these tech woes. So S&P was down slightly. The Nasdaq, which of course is tech laden, the Nasdaq 100 looking bearish in the short term, downside target of 1.2%. So does look like we are seeing a sell-off, but the Nasdaq did go higher. It's not bearish at all on the medium term. It's just the short term that's looking a bit worrying. And taking a look at the Dow, we see that short term is bearish as well. And the Russell 2000, the broader base 2000 US companies, is holding on to its bullishness. So the sell-off is not yet across the board. Looking at the E-mini, down just under 0.5% this morning, so pushing to new lows. It does look like the US will open lower again, and the Nasdaq E-mini is actually down 0.2% this morning, making new lows. We've got downside targets of 1.3 and 1%, so it does look like US is heading lower today. The FTSE just nudging now this 7,000 level. Who would have believed a few months ago we were at 7,800, and we're now just approaching falling below 7,000. We've got downside targets of 1.3% here. And on the medium-term chart, we've got bigger downside targets now. So really is a bit worrying for FTSE, 4% downside and even 13% downside. So we are seeing the FTSE just looking dire. FTSE 250 also looking bearish on both charts, medium and long term. So that's not looking good either. And if we look at the weekly chart, we see now we are finding some support on the cloud, but a really poor performance over the last few months for the FTSE 100. So taking a look at German DAX. German DAX is actually looking a bit stronger than FTSE, but just turning a bit weaker again this morning. And the CAC 40, the French index, also just starting to turn a bit weaker and downside target. So the sentiment is deteriorating on European markets. Tokyo, we're seeing here, we're bearish below the cloud, trying to get back above on the short-term chart, but medium-term bearish. The Hang Seng Index in Hong Kong, we're seeing here just holding on. One of the better looking indices of late, still bullish on all three time frames. The Chinese market, Shanghai local market, really just flat for the last few weeks. There's really nothing doing there. We can see that fall, the rise, and then just that position here where we're just going sideways waiting for the next move. Good chance just rolling over and going lower here. 2.5% downside targets there. Still on the longer term charts looking so bad, but short term and medium term not as good. And the Sensex also just deteriorating as well, so the Indian market not looking as good as it has been. The Australian market was off also, just slightly bearish there. And the big story yesterday was that Brent crude really ran a long way. It was up a few percent, nudging this $70 level now. So at 69.20 this morning. So looking very strong indeed. We've got good upside targets. There's a short-term target to 71.75, and we've got here targets into the high 70s, 77, 78.5, 84.68 even. So we are seeing some big thrust targets there on crude oil. WTI we're seeing also pushing higher. So we've got upside potential here as high as $66. That's 2% upside, 66.50, and also $73 for the longer term target. So still looking pretty bullish all round crude oil. Taking a look at US nat gas, just teetering along at this $2.65 level. So looking more there. Gold had a big move yesterday, both on trade fears and the Fed announcement. Inflation fears in the US, and that is going to give us a new thrust target here. In fact, I can put that on the chart now. So we will have a target here when that's activated of 1382. If we do get to 1382, that would break this critical 1370 level. So it would be very significant if this first move is going to give us that target. So gold looking bullish again on all three time frames, and silver also looking pretty bullish as well. With that jump, as you might expect. US 10-year yields did really wobble yesterday. We had a lot of volatility. We were as high as 2.94% at one point, and we came back at the end of the day to 289. So a really big move on that Fed announcement. We've deteriorated this morning, so quite interesting that we're just seeing bond yields coming lower again. The markets pricing in now not an as aggressive tightening as was expected. It was whether it was going to be 3 rises or 4 this year, and 3 seems to be the consensus now, and so the market's coming back on that. A 4th rise this year would have pushed that higher, but we'll see how the commentary from the next meeting has an effect on bond yields. But for the moment, they've just turned bearish again. Taking a look at US tech. Most tech stocks were down quite heavily yesterday. Apple was down and is still bearish below the cloud. We've still got 1% downside potential on the short-term chart there. Amazon is the one stock that's holding on better than any. That was down very slightly. Google also is lower, so we're still bearish there below the cloud. Of course, Facebook was the big story. It actually recovered a little bit yesterday, but there's no denying that this chart is now a radically changed chart, and we will have new downside targets on these thrusts as well. So it does look like there's potential for Facebook to come right back to the sort of 150 level, and that would be, as we said yesterday, the base of the cloud is at about 145. We've got targets to 141, 161. Not that far away, about 5% away, or 16% away if we deteriorate all the way to 145. So be interesting to see. But this is obviously a big story, and it's affecting a lot of tech stocks in sympathy. And Microsoft, just taking a look there, also just looking bearish. So US tech stocks not looking good this week. Facebook hanging over the market. It'll be all eyes on where the price goes next. That's it for today. Until tomorrow, happy charting. See you then.